Today we are going to just be looking at understanding short/long-term themes and how to apply them to trade. So this is something that is needed in everybody's trading career. This is essentially how those, the big banks essentially takes those medium-term or short to medium-term sort of moves to the upside. And we are going to mainly today look at the US dollar. So first, let's just run straight through into it. So what is a short-term theme? So a short-term theme doesn't change the long-term view of a currency pair unless it materializes to become an issue, i.e., let's say, for example, as you all know, we are obviously bearish the dollar on a longer-term perspective. However, if the Fed, is holding rates for a lot longer than expected, or the China reopening isn't at a pace that the people were, or that the market was expecting for this year, or towards the end of this year into next year, or let's say European data really turns negative and then the ECB needs to start cutting, that would be, that shorter-term theme that some participants were trading, i.e., Fed moving rates in the near term, ECB essentially moving rates higher than or further in terms of months than the Fed, i.e., the Fed is expected to raise rates one more time in July and that's it, whereas the ECB is expected for 2 more months or 2 more meetings. Unless, let's say, that materializes into something big, then naturally our theme would change. But generally, the short-term theme is just a way of, as we said here, a way of pullback opportunities. So view short-term themes as pullback opportunities. We'll get into that. We'll get into essentially how we can understand if a short-term theme is a short-term theme, or how we would look to trade that. If you want to, as I said, you can trade the theme, but remember, you want to be in your long-term trade at some point. So what you do is, let's say you say, okay, in the near term, we could see the dollar trade higher. Okay, I'm going to trade it up to this whole number here, or this order block up, this supply candle up here. Monitor price action, monitor the longer term theme. Is the longer term theme starting to come into fruition? If that is the case, then naturally you'd want to get into that long-term theme, potentially exit that short-term theme. Or you could just take a large amount of partials off the shorter-term trade, get into your long-term trade and go from there. Wait for main catalyst news for trading the idea. So trading the short-term theme is, for example, every sort of point in the market is different. So i.e., the markets will look at specific points of data. They will push away other points of data that isn't really of interest. For example, in the US, trade balance data is a prime example of that. It's not really important. We see it, we see it come out, for example, stronger, and the dollar does not react whatsoever, but it reacts to CPI data, for example. This is that longer term theme, those data sets that would alter the short and the longer term theme. NFP is another example, so labor market data, especially in this example here. So yeah, shorter term themes, let's say, we'll get into exact examples, but then CPI comes in stronger again, markets may trade that shorter term theme up, and then you could potentially get into some dollar longs in the near term. Wait for short-term themes, tend to drive what's known as pullbacks. I see it as pullbacks. You can also see it as potential profit taking also is another way of, but short-term themes drive, there has to be a fundamental reason why the dollar would rally 2, 3, 4, 500 pips to the upside before shorting again. There has to be a reason for that. It can't just be profit taking. You can apply this framework to every currency. So it's not just the dollar, but we are going to focus this on the dollar specifically because you can, it's a good, very, very good currency to look at for sort of the global FX markets. As we know, dollar does tend to drive a lot of other currencies. Long-term theme is the view of a currency over a sustained period of time, mainly 6 to 12 months. But like we know, this theme can occur longer if the issues still persist. So as you know, we're fundamentally long-term short the dollar, into the year end. And then if that still persists next year, then we'll still be short the dollar. So we can still be holding those euro dollar longs above 115 if the fundamentals still persist. The long-term view is everything, i.e. risk sentiment, data, external issues, policy path, etc., bundled together, and then you get a view of the currency. So do it for the dollar, everything added together. This is my long-term view of the dollar. Everything bundled together for the pound. This is my long-term view of the pound. Everything bundled together. This is my long-term view on the euro. And then you pair, okay, well, I'm fundamentally short the dollar on the long-term perspective. I'm fundamentally long the euro on a long-term perspective. Then clearly your long-term theme would be long euro dollar. But then you understand at some stage there's going to be big pullbacks. It's going to be happening with the Eurozone. There's going to be stuff happening in the dollar. And then this could all be your short-term themes to drive those pullbacks. And as a result, you could get into those trades if you want. If you don't want to be waiting for trades for a long time, or you don't want to be just short the dollar and just holding that forever, you can, as we said, hold that short-term, that long-term theme, into whenever fundamentals switch. Then you could get into that short-term theme if you just want to get into a trade. But like we've said many times in our breakdowns, you don't always have to be in a trade. That seems to be a big issue for a lot of people. Remember, do the framework you have learned in the videos to get a view of the currency and apply them to the same framework to every currency. Remember, pair the strong versus weak, and now you have your long-term view. And the same applies to a short-term theme. So like the examples I've said previously, CPI, let's say, comes in really strong, then that's a short-term theme of maybe higher dollar. And then let's say euro area has some issues, maybe, I don't know, risk off comes back into the market. That's not really generally pretty good for the euro, not generally pretty good for the pound, not generally pretty good for the CAD. Or let's say, for example, a pound, let's say there's now issues of growth or inflation starts to fall, you could trade that as a GU short, for example, because one, you have a short-term theme of maybe higher CPI in the US, stronger dollar, but then remember this shorter-term theme drives where it drives it into those longer-term areas of interest. Now, in the DXY, I've done this nice little chart. Short-term theme is that dollar trading higher. Remember, we're long-term fundamentally short, so the push higher in the DXY is our short-term theme. Why would it drive that higher? And then the long-term theme is that big moves to the downside, and then eventually, it does start to bottom out, and then the short-term theme takes into effect, and then the long-term theme comes back into fruition. Again, there's always reasons for that, and I'll show you that just now. So, short-term theme from February 23rd or February 2023 to early March 2023. So that's the previous example I showed you with that DXY. If you just go back, you can see that. But like we said here, markets were repricing the Fed's view of interest rates. So throughout February, that came into fruition. Inflation came in slightly hotter than expected. So markets thought, actually, you know what? The Fed has more room to run. Markets ran with that view. And Chinese growth was starting to sputter. So it's starting to slow down. And as a result, that's pretty good for the dollar. It's not really good for risk appetite, as we know. And there was upside surprises in such as key data such as CPI and labor market data, so NFP, unemployment rate, etc. So that was still showing resilience, and the markets thought, well, we actually expect you to go a bit higher than what we previously thought. As a result, that's going to be pretty bullish for the dollar. Markets went long the dollar and short sensitive currencies to China and higher treasuries. As you know, treasuries, for example, the Japanese yen is very sensitive to treasuries. Currencies that are sensitive to China, for example, euro, the Aussie, etc. If you go back into February, you would have seen AU push to the downside. You would have seen euro dollar push to the downside as those short-term themes. But remember, if you've done all your longer theme analysis, you would know, okay, well, I understand at the moment there's a short-term theme going on because I'm fundamentally short the dollar, but we understand in the near term we are expecting to see a little bit of strength because of this reason, and this reason. As a result, if we see euro dollar push lower, where is my next area of interest for it to struggle, essentially? Where is it going to start bouncing? That's when you can do your demand candles, your whole numbers, for example, like 105, 104, 103, 102, etc., 110 for the euro, etc., all of this. And they're all support and resistance. That still works. Remember, technicals is just a way of getting into a position. And as a result, you can apply a lot of different strategies to get into a position. So there is no right or wrong answer with that. Fundamentals will drive where the short-term theme goes or where the currency goes in the near term. But then the markets are in the understanding they want to be long-term short the dollar. It's just a matter of when. And we'll get into that in just a moment. Long-term theme. So If you go back to DXY, early March 23 to mid-April, we saw that big sell-off in the dollar. And as a result, the main reason for that was the banking issues questioned the Fed's interest rate path. Because, if there's a load of banking issues, there's going to be a bunch of, it's going to ripple through the financial system. As a result, the markets will begin to, ask the Fed, do you actually see yourself hiking, another 50 to 75 basis points at the time anyway? And then the markets are like, we probably don't see that. If this becomes an issue within the US, the Fed's probably not going to be able to do that. As a result, the dollar sold off. Banking issue was mainly in the US and one issue in Europe. So of course, as we know, the issue in Europe was Credit Suisse. Then that was it. We didn't hear anything back or any other banking issues in Europe. So Euro did, obviously shorted in the near term at the time of Credit Suisse, but then it went long again. And the fact we kept seeing loads of different, smaller banks have all of these issues. And the markets were really focused on the US at that stage and we actually thought this is going to be bad for your interest rate path. And then the markets went pricing in cuts for July quickly, which, as we know, is generally negative for the currency. So as a result, the markets were previously, before the banking issue, they were expecting cuts, towards I believe it was around September. And then they brought forward that to July. As we know, it has been pushed back all day into next year, but this short-term theme was that was questioning the shorter-term theme in the near term. Markets then thought, actually, this is going to potentially change the whole view of the Fed. And as we know, because we're short, long-term, fundamentally short the dollar, this was driving or helping us with that longer-term theme. However, economic data was still very resilient, so inflationary, allowing the markets to reprice once the issues were resolved, which leads into the short-term theme, which is this one over here. So it's around mid-April. We saw a bit of consolidation, and then throughout May 23, we had debt ceiling worries, which created a safe haven bid in the US dollar. And this was mainly a function of, if there was no resolution, the economic fallout would be catastrophic. And as we know, the dollar is seen as a safe haven in times of massive issues within the US economy, and also global issues as well. And markets pushed back cuts to year end. And as a result, previously in the other example, in that long-term theme slide before, markets were expecting cuts in July, and then once all the banking issues were resolved, markets actually pushed back cuts then towards the end of the year. And European data was stalling and it was starting to fall. So we saw German ZEWs was the main one for Europe. That fell, and then all the subsequent sort of Chinese data also started to fall. Again, like the industrial production, for example, the PMI data in Europe, especially in Germany, the manufacturing PMI started to fall. This was given the view that maybe Europe is starting to see a lot of struggle. Then markets were kind of questioning the ECB at that stage. So if then at this area here, that, well, the markets were pushing back cuts to year end, which is positive. If they're bringing forward cuts, so they're saying you're going to cut a lot earlier, that's negative naturally. If they're pushing back, then they're saying the Fed can hold for a bit longer than initially thought. That's good for the dollar. And as we know, in a safe haven environment, the dollar is strong anyway. And then if you saw that the European data was starting to become quite weak, then you think, actually, we could see DXY pull back. As a result, I could get into that short-term euro-dollar short. Then we led into sort of that longer-term theme, which is June 2023, and then to mid-July 2023. So I am recording, obviously, in July 2023. So it is, you could obviously tell back to sort of other aspects. If you join us, let's say the end of this year, then you can go back and see actually what was driving the dollar throughout August, what was driving it through September, October, etc. And you can apply this framework to every single currency. It's not just the dollar that this can be applied to; it's every single currency. Do it for the pound, do it for the euro, do it for everything. Get your long-term view first. So I'm short the pound on a long-term view, for example. I'm long the euro on a long-term view. Then you look at the short-term views and think, okay, in the near term, data's doing this, risk sentiment's doing this, China's doing this. This all points to, let's say, lower euro dollar. But then we know at some stage we want to get into a long. So the fact that the dollar sold off all throughout sort of June till then mid-July was that because, well, signs that inflationary pressures were starting to ease or they are easing. We know that the Fed held interest rates at 5.25%. The markets were then questioning why would you do that, and the fact that the credibility wasn't there. The markets were then selling the dollar in that environment. We did see a bit of a push higher, as you can see in that chart on the right. We did see a little bit of a pullback in dollar or the DXY. It's mainly a function of European data and also US data starting to show a little bit more signs of resilience. And we did see that dollar did push slightly higher as a result of that. And then what we saw from then on is a weak NFP, but a strong ADP. But as we know, the markets will run with the more important NFP figure. And then we saw a 0.2% inflation print or core CPI for June. And it was previously, before that, 0.4%. So a 0.2% fall in core CPI. And as we know, core CPI is essentially the driver of where the Fed goes. The fact that it's fallen, then the markets begin to question what are the hikes going to be after July. And as we see here, it all points to one more hike and done. Markets were already priced for this event anyway. They were expecting it even before the fall in core CPI. So this was no news wasn't any new news for the July hike, but then it questioned the September hike. And equity markets were higher on the back of optimistic long-term risk-on view. So if you look at the S&P, the Nasdaq, etc., they're all climbing higher. We saw, for example, European equity markets higher also, again showing risk on, and the fact that the dollar is generally a risk-off currency. You are seeing like the likes of euro dollar trade higher, pound US dollar trade higher. Pretty much everything priced against the dollar is trading a lot stronger, even the Japanese yen. And the fact that we saw that 0.2% fall in the June CPI, markets were then looking at the treasury comparison to that. As we know, the treasury or the yen is very sensitive to treasuries, and then people were like, actually, the fact that treasury yields are falling, that because markets are now expecting just one more hike and done, that is generally pretty good for the yen. And of course, that's coupled with strong wage growth data we saw in the yen, also adding to that long-term view of buying the Japanese yen. So it all adds together. I wanted to make this all quick and simple, but all you have to do is get your long-term view first. Then from then on, you think, okay, long-term view of the dollar is this, long-term view of the euro is this, long-term view of the pound is this, NZD is this, Aussie is this, CAD's this. And then you look at, okay, cool, this all points to this trade. And remember, pair your strongs and your weaks together. So who has the most issues? Who has less issues? There are obviously going to be issues in this sort of time in the cycle because everyone's hyped really aggressively. Naturally, that is going to bleed into the data, but then you just pair who has a much better backdrop. So in the future, who is going to be better off? And that comes with time, that comes with work. You have to, think of it like when you were starting to learn technicals, it was really easy, or it was really hard, at the start, but then it became a lot easier, and now it's kind of second nature to you. Same thing with fundamentals. Really difficult at the start, probably even more difficult than technicals. Or trying to say it is more difficult than technicals, but at some stage it's going to get a lot easier, and then it just becomes second nature again. So, like I said, get your long-term view first, then look at your shorter-term views. Okay, in the near term, we're seeing strong inflationary pressures from the US, for example. Obviously, we're not, but let's say we were. Strong inflationary pressures in the US. European data is not exactly the best. For example, Chinese data was slowing down. Equity markets are kind of selling off. Okay, in this environment here, I would rather be long the dollar. As a result, I'm going to reflect that through short euro dollar. And then you think, okay, I'm going to short it down into this area because there's a high time frame demand candle there. There's also a key level, let's say 106, 107, 108, for example. Then you trade it down into there as your shorter term theme trade. Then at some stage you want to get long the euro dollar on a longer term perspective. So it's just a matter of watching the data as the shorter term theme. That short term theme is basically being driven by the data. Then from then on, you want to get in your long-term trade at some stage. So this is why you could trade those near-term. You just have to figure out what, if you're selling NZD CAD or if you're buying Euro Aussie, is this a short-term theme or is this a long-term theme? And this is why it's important to do that long-term theme first so that you have an idea. And then from here on, okay, if I'm buying it, but I want to be short Euro Aussie in a longer term perspective, where am I going to buy up to before I get short? And why is it driving higher? That's the most important part. This drive higher, is this a short-term issue, or is this going to sustain into a longer-term issue? And the fact, we understand the long-term issue or the short-term might sustain into a long-term issue. That comes with time. Naturally, you can't gauge it off in 1 or 2 prints, but you have to trade from what you see at the moment. That's the most important thing. So hopefully that makes a little bit more sense on how to trade both themes of the market, your short-term theme and your long-term theme. And then from then on, trading should become a little bit easier, but please backtest this. Please go out and do your backtesting. For example, in the near term, we understand the pound US dollar should be trading higher because the rates are expected to go further in the UK. Well, that's completely fine. I do agree with GU higher on that perspective, but we know that the UK is facing a lot of struggle down the line because of mortgages, because of, if the BOE does get to 6%, 6.25%, which is what the markets are priced for, that's going to cause a lot of issues for growth. So we understand in the near term, the pound is going to trade higher because as that short-term theme, but we know at some stage that longer-term theme is going to play into fruition. So you just pair those strongs versus weaks together. So that's just a up-to-date example. So hopefully that makes a bit more sense, and I will see you in the next video. Take care.